The market is clearly weak at midday, but this is not a panic sell-off. This is a controlled decline driven by banking pressure, weak global cues, and selective selling across heavyweights. Let's break down exactly what is happening till midday and what traders should realistically expect in the second half. At midday, Nifty is trading at 25,877, down nearly 150 points or 0.57%. The index opened weak around 25,951, attempted a small bounce, but selling pressure continued through the morning session. The intraday low near 25,871 shows that buyers are hesitant to defend higher levels. Market breadth is clearly negative with 14 stocks advancing and 36 stocks declining, which confirms that selling is broad-based and not limited to one or two stocks. So far, Nifty is trading below the opening range, which keeps the intraday structure weak unless buyers step in decisively post-midday. Bank Nifty is the biggest reason for today's weakness. At midday, Bank Nifty is at 59,080, down 382 points or 0.64%. The index opened at 59,288 and kept drifting lower with no strong recovery attempt. Out of 12 banking stocks, only one stock is advancing and 11 are declining, which clearly shows sector-wide pressure. Axis Bank is the biggest loser, down nearly 4%, creating heavy pressure on the index. PNB, Bank of Baroda, IndusInd Bank, Federal Bank, and SBI are all trading in the red. HDFC Bank and ICICI Bank are also weak, offering no support today. This kind of banking structure tells us that institutions are not defending banks aggressively yet, and that keeps Bank Nifty vulnerable. Global cues are not helping today's sentiment. Dow futures are down around 0.30%. S&P 500 futures are down 0.54%. Nasdaq futures are down nearly 0.85%. Asian markets are also weak, with Nikkei down more than 1.3% and Shanghai Composite close to 1% lower. This global weakness is keeping Indian markets cautious, especially in heavyweight sectors like banks and IT. Commodities are clearly indicating a risk-off mood. Gold is down around 0.5%. Silver is down more than 1%. Crude oil and Brent crude are both down close to 0.8%. Natural gas is sharply down over 2%. Falling commodities along with falling equities show that global traders are reducing exposure across assets. The USD INR is trading near 91.05, up around 0.3%. A weaker rupee adds pressure on foreign flows and also impacts sentiment in sectors like IT and capital-intensive companies. As long as the rupee stays weak, upside attempts in the index may remain limited. The India VIX is trading around 10.31, up nearly 0.6%. Although VIX is still low in absolute terms, this gradual rise tells us that uncertainty is building, especially for the second half of the session. Low VIX does not mean safety. It often precedes sharp directional moves. Axis Bank is the biggest drag on the index today, falling nearly 4%. And it is single-handedly pulling down both Nifty and Bank Nifty. This sharp move in a heavyweight stock is keeping recovery attempts extremely weak. Eternal is also under pressure, down more than 4.5%, and this stock-specific selling is adding to broader market negativity and sentiment damage. IT stocks such as Infosys, TCS, and HCL Tech are weak due to negative global tech cues and a firm dollar. This sectoral weakness is preventing Nifty from stabilizing despite multiple intraday attempts. Stocks like ONGC, Coal India, Tata Steel, and JSW Steel are trading lower as global commodities remain weak. This confirms selling pressure in cyclical sectors. Even defensive stocks like ITC, Nestle, Sun Pharma, and Cipla are flat to negative. Lack of support from defensives is adding to overall index weakness. Today's market is not seeing panic selling. Instead, this is a slow grind lower driven by persistent weakness in banks, lack of buying interest at higher levels, weak global support, FIIs not showing aggressive buying intent. This type of price action often traps early dip buyers if support breaks later in the day. For the intraday traders, be cautious as this is not a trending market yet. This is a patience testing, range to down structure. Chasing trades in the middle of the range can lead to emotional losses. The better approach is to wait for a clear breakdown or a strong recovery signal. So friends, this is the midday scenario of the market. If you found this video useful, like and share the video to your trading groups and subscribe to Wealth Mama for more updates.